It's a bear. Good morning. Hey, what's up? This is Brian Kuzmar with Commercial Rare Coins and Precious Metals in beautiful Lauderdale by the Sea. Got the Deerfield Beach cam up and lots of little bait fish out there. Looks like the water's clearing up. And the rain is kind of going away a little bit. And looks like we're going to have blue skies today, possibly. About time. Been rainy for the last week or so. Well, let's move into what we're going to talk about today. And let me quickly go over spots real quick. We're up today. The coin said a bear. I'm thinking a bull market myself. So, hey, we just do the coin for fun. Let's see how often it's right or wrong. Seems to be 50-50. So, along with me, I seem to be about 50. Actually, I'm doing a better job than that. So, market's up a little bit today. 1805, a high 1830. We're up near that point right now with New York at 1828.82. Silver sitting at 26.36, up as well. Still moving in that 50-cent range, and gold still moving in that 1800 range. But still, a little move upwards looks good here. 25.97 to 26.39. Platinum holding that 1100 plus mark, looking as good as well. And still, all three are a great buy. Gold's a great buy. Anything less than $2,000. Right now, my thinking is anything less than $2,000 is a steal. Anything less than $30 silver is a steal, and anything less than $1,200, $1,300 platinum is a steal, in my opinion. And as I've been saying, of course they're going to monkey hammer, and of course they're going to manipulate it down, but it provides customers with a great opportunity to buy the dips. And it seems like the premiums on a lot of stuff are coming down as well. So that's a good thing too. And let's kind of move into news today. I'm kind of in a wissy mood. No, wussy, not a wussy mood, a pissy mood, I should say. I'm just looking around at all the news. I feel a bit negative today. I mean, it's hard not to. I'm generally a positive guy, but over and over, I mean, this manipulation, this monkey hammering, whether it's markets, gold and silver markets, stock markets, the economy, the elections, you name it. It just... Everywhere you look, it's so in your face now. It's just insane. On top of that, censorship by the big media companies out there, whether it's Facebook, Twitter, or even YouTube. It's just insane what I see going on out there. And I don't know where we go from here, actually. At some point, I think it's just going to blow up in their faces, hopefully, because I'm anticipating that blow up. I just don't know when it's going to happen. Well, let me move along from here, and I didn't mean to whine about how I feel about the whole thing, but it's true. It's just kind of, at some point, it's getting a bit sickening here. Well, let's see what's happening with here. Democrats strike a deal. So another $3.5 trillion that we don't have. Looks like D.C. is going to spend or wants to spend. That's not untypical. Where do they get the money from? Well, it's MMT. It's that socialism, that modern monetary theory, which they believe it would make Keynesian, would make Keynes spin in his grave, that they believe they can just endlessly print this stuff nonstop, and that's kind of what they're doing, and they're going to just tear this entire economy and tear this entire country apart. They've already done it, actually. It's just starting to crumble around the edges right now, and at some point the foundation's going to fall out right from under it. That's my opinion, and I know exactly who to blame. It's the people up in Washington, D.C. You can blame them, and then you can blame their crony capitalist friends, corporate media, and the corporations that are in bed with our government. At some point, folks, we got to take this thing back from them. I mean, I don't know what to say. Well, again, let me move on here. $3.5 trillion that we don't have, they want to spend on a human infrastructure package, and that'll just, hey, what is this? Again, the positive thing, it's good for gold and silver stackers as far as the medium and long-term price. The only place we can go from here with gold and silver is up, up, up. They're destroying everything, folks, and that's the truth of the matter. Futures treasuries jump after Powell says economic recovery hasn't progressed. Oh, gosh. What kind of idiot would have actually believed that we've been in any kind of recovery? Recovery, my ass. I'm sorry. I'm just going to say we haven't been in a recovery at all, and we're not in a we're not going to be in a recovery. We are in the decline. We are in the decline of our empire, and basically, it's evident. It's all around us. It's in our faces, and in fact, they don't even try to hide it anymore. We're in the decline. There's no recovery going to happen, folks. The only recovery we're going to see is a slight recovery from the boneheaded closures that these people did in 2020, and all they did was accelerate the decline of our empire by doing that. But we will see a little recovery, so to speak, because they closed everything down for a year. They closed down people's lives. They closed down businesses. They closed down. I mean, I'm beside myself when I think about this. And again, maybe I need another sip of coffee here. Let me calm down. So we're in a decline, folks. We are not in a recovery. They can call this a recovery, and again, it's just a bounce. You've heard the term dead cat bounce. That's what this so-called recovery will be, a dead cat bounce. Why? Because they have fixed absolutely nothing. Powell, our government, governments worldwide, central banks worldwide, they have fixed nothing. In fact, the corruption, the graft, and the stupidity has even increased more. And as I said, it's so in your face, they don't even apologize for it anymore. It's just ridiculous. So recovery, nonsense. These people they think we're suckers and fools. They really do. Inflation, the next stage of global financial crisis, 2007 to 2031. Can't argue with that. I think we're going to see some major inflationary times. They're lying to you again, folks, if they say that's not happening and it's just a minor transition. The same folks that are telling you about a recovery instead of the dead cat bounce, what it really is, they're lying to you again as far as no inflation. Come on, give me a break. We've seen it prior to this. Inflation has been off the hook kind of in so many ways. Food prices for years and years, sending your kids to college, the price of rents, the price of owning a home, the price of owning a car. All this stuff is ridiculously high. I don't know where they get their CPI numbers. What is it? The price of an iPhone? Even an iPhone has gone up dramatically. So as far as not having inflation, who are they fooling? Who are they kidding? Really, give me a frickin' break. U.S. producers' price soared at a record pace in June. There's nothing good here. And again, it used to be these articles were kind of like conspiratorial. Something they just come right out and say it right now. They just come right out and tell you. They just come around and say, "Yeah, we're censoring you. Yeah, we're screwing you." Yeah, they just come right out and tell you, more or less. But what are you going to do about it? That's kind of their stance. Well, I tell you what we're going to do about it. We're going to prepare for ourselves, and we're going to make sure that when when everything goes down, that we don't go down with it, more or less. And how are we going to do that? We're going to protect our money. Wealth preservation. It's called gold and silver. Arizona Senate President says 2020 election ballots doesn't match Maricopa tally. Well, that's surprising, right? Futures rebounds as Apple soars to all-time high. I don't know. Is Apple selling a lot more phones, or are they just kind of getting some of that free money? Not quite sure. Probably all that investment money flying into Apple. I don't think they're selling a crazy amount of phones. In fact, when's the last time you heard about lines out the door at the Apple? It's been a while, huh? So where are they? Futures rebound. Give me a break. Bank of America slides after trade. Well, no wonder Bank of America slides. They should have slid a long time ago. Slid right off the mat back in 2008. It's a poorly run bank. It always has been, but too big to fail. And that's just my opinion, of course. Let me go. Gosh, I'm really on a roll here today. So, Icelandic studies suggest government workers are unnecessary. Well, a lot of us in the United States could have told you that 20 years ago, that a lot of government workers are unnecessary. There's no doubt about that. Nothing really great going on here. I don't see too much in precious metals. Good on the Texas governor. I hope he follows through with that. And U.S. deploys, again, that's not a good thing right there. U.S. deploys F-16s to Bulgaria. The last thing we need to do, folks, is get back into another Cold War. And I don't know why our government is pushing towards that, especially the so-called Party of Peace, the blue guys. It's beyond me. It's beyond me. So let's get back to basics here. I'm going to get out of here. Boy, there's something else. Super Mario 64 video game sales. This tells you, when the money just starts being printed willy-nilly, and there's so much money out there, it looks for places to go. I mean, look, $1.5 million went into a video game, a Super Mario 64 video game. Folks, if we're not near the end times here, I don't know what to tell you. I don't mean in a biblical proportion, but I mean economically, end times of the empire, end times of a fiat currency. I certainly believe we are. We're getting near the end times here. Does end time mean next year? Does it mean a decade from now? or 20 years from now? That I don't know, but I can tell you we're in the slide. We're not in the recovery. Let's move over to GATA.org. There's a couple articles here I'd like to talk about. See the ugly. I read this right here. Ed Steer talks about the ugly COT report, and more or less, I think a lot of people were hoping that the short positions. There was supposedly like 4 big short positions out there, from what they say, that are shorting the silver markets. That are the monkey hammers. The with the help of COMEX and with the help of corrupt regulators. They keep the price of silver down, but they can only keep it down for so long. Don't forget, JPM's out of their short position. They're waiting to go long, and so they're sitting on a bunch of metal, and they're waiting for the other short positions probably to back out or get out, so they can take their huge billions of dollars worth of profits from all those years they did monkey hammer the markets. No less, I digress. And what we've got, an ugly COT report. It means that a lot of guys were hoping that this upcoming COT report we would see a reduction in the short positions, in contracts and shorts, but that did not happen. In fact, it increased a little bit. The short positions increased. Just means the monkey hammer is going to last a little bit longer. However, listen, a lot of guys get really upset with that, and I think it's the people that are more in the get-rich-quick camp. They want to see silver double up this year so they can get out and get into the next best thing or whatever. But that's, again, I've been saying it for a long time. These metals are about wealth preservation. It's not about getting rich quick. So what does this do? When these people out here keep increasing their short positions or don't or monkey hammer these markets down, it provides you and I the opportunity to buy this metal and get rid of our fiat dollars and get rid of other assets that are going to decline as time goes on, and turn those into more gold and silver bars buried in your backyard or wherever you put them. So it provides a good buying opportunity. And if you're already bought in, you just gonna have to wait this out a little bit. It'll happen. Trust me. We're not even close to getting into a really radical bull market in precious metals right now. We're just kind of in that interim stage, that early stages of the bull market. Remember, this started in 2016. I usually see bulls develop over a period of 10 years. The last couple years being the where they really start to go crazy. However, this bull market that we're in right now is not going to look like the bull market of 2012, which got artificially manipulated and knocked down, and the bullshit market. I mean, the market of 1980, which actually got knocked down as well. So we're not even into that stages of the crazy bull market yet. So great opportunity to keep stacking here. I think when the market does turn, it's just going to go insane. And of course, the big banks that have been shorting and filling their positions with metal like JP, they're gonna make a lot of money as well. But you know what? Sometimes we got to deal with that. Let them make their money, but we're going to make it as well. So. Berlin gold coin heist, defendants lose appeal. Whereas this was kind of an interesting article by Craig Hemke at Sprott. And let me just kind of click that here, Sprott Money. And I'm going to read this real quick. And corrected gold lessons. He kind of noted on something I did in a ZH article the other day. Let's take a look at it. If there's anything positive about 21st century finance, it's that the internet allows you to find all sorts of analysis to consider. Yeah, that's what this show is about, and that's what my videos are about. It's so cool I can go out there and find stuff and share it with you as well. Back in the day, you were stuck with the ravings of your commission-hungry stockbroker and his sell-side research. Today, however, those that are willing to seek out investment information can do so without outside influence. To that end, it's now more possible than ever to educate the masses on sound money, monetary history, and the manipulation of markets by central banks and their primary dealers. This is the beauty of the internet. This is the beauty of YouTube. This is the beauty of Twitter, Facebook, all the social media sites, except I honestly believe that, where there's censorship when it comes to political discussion out there, elections and that kind of thing, I believe that there's going to be censorship when it comes to economic discussions as well. There's some people believe that. right now, I believe that that could be a fact as well. If a lot of people out there start saying things that the powers to be, the big corporate crony people that are in bed with government don't want to hear, they're going to start censoring economic advice or economic things as well. Let me move along from there. Sorry about that. Again, I'm on a roll today. A little pissy mood. I'm in a pissy mood. Sorry about that. As this relates to the gold price, anyone with internet can access now learn about the crisis of 1957, the London gold bull, Nixon closing the gold window, and more. We've had some shows. We've discussed this over the last year, and we've had some good videos on this where we've gone in depth about this as well. You can also learn from long-term historical drivers of price and significant correlations that have held for decades. Two of these are money supply and real inflation-adjusted interest rates. We use the space often to discuss the relationship. And said, let's embark on a short history lesson below. Below is a link I found on Zero Hedge last week, and I saw this link as well, and it made me wonder, just like Mr. Hemke here. It's a brief article again, and it helps understanding some of the basic long-term drivers of price. However, for today, I'd like to focus on one final paragraph and offer this history lesson for those wanting to learn more. So let's focus on the sentence in that post. And I read this and I thought the exact same thing that Mr. Hemke did. The author stated in this post, in 1975, private citizens were allowed to start owning gold, again in a macro environment of a heightened inflation. So one might have expected gold prices to rise in 1975, but the exact opposite occurred. Now remember, Nixon took us off the gold standard in 72. We were allowed to buy gold and silver and stuff like that in 75, I believe, and the prices kind of went down in 75 or 76 before they went back up in 1980. But that's it. That's where the article ends. And so one might have expected gold prices to rise from 75, but the exact opposite happened. And again, I had the same question mark in my head. Well, why? And that's where the article ends, as Mr. Hemke points out. Was there anything else that occurred in 75 that might have caused the exact opposite to happen? And Mr. Hemke clearly points out here what was going on. And as you know, President Roosevelt signed Executive Order 6102 on April 5th, 1933. The order demanded that U.S. citizens should change their gold for 2060. Okay. It remained that way until January 1st, 1975, when President Ford finally rescinded the order and once again allowed private ownership of gold. Now, a lot of people mistaken that Nixon taking us off the gold standard in 72 allowed private citizens to own gold, but that was not the case until Ford did it in 1975. So why then, as the author notes, did the price fall when one might expect it to rise? Perhaps it won't surprise you to learn that COMEX gold futures began trading on December 31st, 1974. Thank you, Mr. Hemke. I did not even know that. I wasn't even aware exactly when they started, but this starts to make a lot of sense now. And I really appreciate you doing the research to tell us. I learned something new when I read this article today. So big thanks to Mr. Hemke for looking that up and alerting us all to this. And what was the purpose of establishing a gold derivative market? Well, what have I been talking about this morning and all day? What do I talk about all the time? Monkey hammering manipulation. Well, that's exactly what we've got going on, and that's clear, according to Mr. Hemke. He says it right here. Perhaps the expected surge of physical demand could be forestalled or eliminated if gold was now perceived as a volatile risk asset. Well, remember, gold 3 was a tier 3 asset. I'm not sure if it was back then. I'm not even sure we had the bank BIS back then. But no less, if gold was now perceived as a volatile risk asset instead of a sound money store of wealth, you might think that simple conspiracy theory. However, thanks to WikiLeaks, we now know it's actually a conspiracy fact. So the cable in question, Mr. Hemke goes in here and shows the proof that more or less the gold derivative market was created to keep people from getting out of the fiat dollar and going into what was sound money, what the government considered sound money, what was sound money always and always has been until Nixon took us off the gold standard, which is gold. So they have been manipulating and monkey hammering the price of gold since way back then, and it's still going on right now. But the beauty of this is Mr. Hemke clearly puts out here. And let me read this down here before I go into that. And what is the lesson of all this? Gold is massively undervalued in 2021 due to the bank alchemy that continues to this day. Gold is no longer simply physical metal. It is instead future accounts, leases, promissory notes, options, unallocated accounts, ETFs. But all of these can only offer exposure to price when the day comes when the banker's shenanigans finally fail. Those who place their confidence in these investments will find that the only thing actually holding is the proverbial bag. Buy physical gold only, accept no bank-sponsored substitute, and continue to be prepared for the monetary reset that is inevitably coming. Wow, great article there, Mr. Hemke, and I couldn't agree with you more on this, by Craig Hemke. Definitely read this. It's in the GATAorg. Craig Hemke at Sprout Money, Corrected Gold Lessons, and he goes into a little more detail, but great article by him, great work by him, and I learned something new myself today. And let's move along here. What else do we got here? Well, I think that's really about it. I'm going to keep this video a little bit short here, I think. Where's yesterday's video? I guess it's still playing here. Yesterday's video I did was gold to be a Tier 1 asset, and got a couple comments out there, not too many. I think everyone's on vacation because, wow, it's quiet out on my YouTube. And Jay Gill says, hey, Brian, how much are you paying for silver dollars over the counter? I have about 50 in circulating conditions that I bought $17 a while ago. You're going to have to come in for me to take a look at them, but they can be anywhere from, Morgan dollars can be anywhere from $24 to thousands of dollars, quite literally. I mean, I just sold brilliant uncirculated common dates for $50 a coin. I sold circulated ugly coins for $27, $28 a coin wholesale now. So, you know, obviously I like to make some money, so it'll be a little less than that. Wayne, I love the fish too. Battleborn, nice to see you replying and watching. I really appreciate it. And as regards to yesterday's video, yeah, that's what, you know, you got to separate yourself from being a collector and a stacker. You know, when it comes to buying gold and silver, just buy the cheapest stuff, no matter what it looks like, no matter how ugly it is, as long as it's recognizable and you can resell it. If you got the collecting bug, you like shiny things or cool looking things, separate that out and buy shiny and cool things for yourself. You know, try not to combine the things. You're going to lose money buying gold and silver doing it that way, in my opinion. Zipperfix, I went to LCS, local coin store, on my suggestion. My daughter took me. She brought some silver. I got a $10 piece coin. Wonderful. That's really nice to hear. That, you know, I reckon if there's one thing that people take away from my videos, two things actually, is I'm here to do local business here in South Florida. I've been here since 1977. I've been doing this, I'm sorry, I've been doing this since 1977 when I started working with my father in his store part-time out of high school. And I've been doing it ever since. I've been in this location since 1995, so I know my market real well. But you know, I'm here to do these videos to create more business for myself locally, educate my customers. So if you know someone's watching this video or watched a few of my videos, they can come in my store and be a little more educated than they would be if they hadn't watched my videos. As far as people that don't live in my neighborhood, you know, it pleases me when I hear that you went to your local coin stores and you kept that money local, and you know, again, it's real important to me. And I always talk about that, keeping the money local. I'm not going to tell you which products to buy today. I've done that so many times in the past, and as you know, lately I've been just telling you to keep it in a certain range. If you're buying silver right now, buy a recognizable product, recognizable by people in the industry, not by your neighbor. Buy recognizable products in silver. Try not to pay more than a $6 premium. Try to keep it in that $4 to $6 range. If you can buy it for less per ounce, that's fantastic. You know, as far as gold goes, same thing. Try to keep it in that $80 range or less. You know, the coins are getting a little cheaper, but they're still over $100 premiums for a lot of those coins. So if you can buy gold bars and you can buy them in that $70, $80 range or even less, great. That's the best deal out there. Try not to pay more. And that's my best recommendation. Now I'm going to go back and tell you what I've already told you 100 times. Support your local business. Support your local coin store, your local bullion store. Keep that money local if possible in your own town, your own county. And, you know, even if you have to drive an hour or two, keep it in your state, really. I can't tell you how important this is for communities and local communities. Try to keep the money in their towns. That includes buying tires from the local tire guy instead of ordering them online, jewelry, whatever it may be. Try to buy local. And for you local businesses out there, any of you listening to me, you try to be competitive with the online guys. You know, I offer to beat three of the big guys, AppMax, JM Bullion, and SD Bullion. I offer to beat their prices because I'm local. I've come up with the times. I realize that people do shop online, and if you want to be competitive as a brick and mortar, you have to be competitive with the online guys. The beauty of it is a lot of the online guys now, their overheads are so big that a lot of local people can beat their prices pretty easily. So that's what I encourage you to do. If you're a buyer, go out there and buy local. If you're a seller, compete with the big online guys. Trust me, it's worth it. I've built an entire business. Not I built a business. I've been doing this way before they were around. But my business has built up considerably since I started being competitive with the big online guys. And I recommend you other local businesses do the same thing. Well, that's really about it. This is Brian Kuzmar with Commercial Rare Coins and Precious Metals in beautiful Lauderdale by the Sea. Call me anytime at 954-493-8811 for any questions that you may have. Happy to help you out. I've been serving South Florida since and beyond. I like that. I never even knows that. And beyond. Universal since 1977. Happy to help you out with any questions you have or give you the best deal of the day. And hey, thanks again for watching. Let's see what happens tomorrow. Talk to you soon. Bye now.